Greetings, market rebels. Welcome to this week's macro measure combined with sector situation. It is Friday, August 16th, 2024. It's a little in front of 3 p.m. here on the East Coast. I'm Wayne, and we're going to get right into it. Here's our trusty disclaimer. Here is our trusty intellectual property rights notice. And in the interest of time, I'm going to just flash our selective review of the prior week. So first note on this one, obviously set your playback speed to 2x and see if that works out for you. Let's try to keep things moving that way because I know that I try to include a lot of information. It does take time. We cut to the chase last week. We weren't sure if the storm was over. In the end, we noted the election year, the month of August, the upcoming convention, Janet Yellen shenanigans, the Fed likely all being supportive of the market would probably win out if there were no major negative news developments. In other words, news neutral, probably get a lot of those supportive factors helping things. And we also noted that the megas and the spies and Qs, well, the megas were primed, we thought. Spies and Qs damage was reasonable. We were bullish coming in if we were news neutral. And we talked about various retracements. We noted that SMH, I think NVIDIA, all that was looking somewhat similar. And that if the gang did try to push it further because they were able to with no news and maybe with the help of the economic calendar, which they did, that basically they were getting a good deal to keep jamming into those big names. So they did seem to really follow the script, I guess you could say, to a large degree. But a lot of that was probably made possible just because we didn't really get any more negative news, geopolitically speaking, and other domestic types of news that was negative. So I think the PPI, CPI, they kind of worked in their favor. At least they're spinnable that way, whether you want to believe it or not. I have doubts, of course, but I'm just saying, like, regardless, they're able to put the spin on it. That's why you can go broke pretty quickly betting on numbers, because even when they don't get their numbers, they don't always take the market in the direction that would seem obvious. Anyway, we did note that some of those measures like CNNs and the investor sentiment, were registering levels that were tradable lows in the past. But we had to really look at the charts, and the charts showed that, again, a lot was primed to go. So I think those bullets were overall worth covering. In terms of the squeeze, we noted that we wouldn't blow our chance at IV acquisition and all that follows in terms of if they started to move the VIX slower in a big way because they put the squeeze play onto the upside. So the VIX did get smashed this week, but probably still a little bit early to start putting on some of those different strategies. Still would be ready, but I would discuss that again with Greg and Ryan in the webinars. I think you're better off waiting for signs that this has petered out. And I don't think that it's completely petered out, although I do think the most favored scenario or most likely scenario for next week, again, assuming news neutrality, for me, it would be that there's a little bit of a pullback here. So we can try to talk about that when we get to the charts. But yeah, I think the VIX probably drops even more if they've got more goosing ahead, and that might give you a better chance. The other factor is the volatility storm that we mentioned. This is probably a good time to reposition and kind of go to the charts. The storm we've been talking about. This is really a lot of volatility. So I want to just clarify that if some people took that to mean just that the VIX would keep going, no, not when it gets to 65. Apparently pre-market, but still it got all the way up there. What I was referring to was really the historical volatility that's really kind of like actual statistical volatility, measured in retrospect. So this has really been nice and volatile, and the last several weeks have been that way. You kind of have this sort of V or maybe it kind of looks like half of a W formation, but that kind of really big drop quickly, the really kind of relentless right back up on a relatively sharp slope. That's what I mean by kind of that V look. And this is good for trading, right? It's really a good environment, and you have to really react quickly and be disciplined and excuse me, make your adjustments. Not not really without. I mean, I should say without a lot of reservation. Just be a disciplined trader, and every time they keep moving things in your favor, you take the proper course of action. You roll, you trim, you do a combi of both, whatever the case may be, depending on where how extended the movement is in the market or the stock at that juncture. But yeah, that's it. I mean, I'm still sticking with that. You can easily spill back over here if you lose support in SPY, below that blue line, imperfectly drawn, but you get the general idea. I'll just try to move it up a little bit more like that. But you could fall right below that support. That's probably your most aggressive support right now. But there are other forms of support in here. So I have a bad feeling this was not didn't move over on the share. So let me get back to the share. There it didn't. I don't think it's switched, and it still has the wrong one. Oh boy, I wonder why it's messed up like this. Let me try again. Yeah, I think I need to go through that for everyone again. But what I was getting at is here's your V or half a W, and right, this is still the volatility storm. Just to kind of summarize quickly, and in here, this is your aggressive support in blue. But again, that's your most aggressive form that I've got working right now. It's not the steepest incline I've ever seen or ascent I've ever seen, but it's still fairly steep, relentless, and versus, let's say, normal times, which are more kind of like this, right? So over there. But anyway, this has got various forms of support here. So I'm anticipating, right, news neutral. I think there's probably a little bit of a pullback because you are a little short term overbought right now. That's where I'm coming from. It's not as if I'm saying, oh, this whole thing needs to fall apart. There's no way this continues, something like that. But I'm looking at it more like, well, they've got some readings right now that are fairly high in terms of RSI on the 1 hour, for example. It was at 82 earlier today. It might still close near 82 the way that they're hanging in there, right, with the rally. So that's why I'm saying, right, it probably does need a little bit of a breather. I mean, I think that it's been very impressive because I really anticipated that they would try to work things. If they tried to work things back up, they would work them up into here, kind of like this nexus I'm circling around with my pointer. It would be probably more hard pressed to get through there, but they were able to use news to gap right through it, which is, it's a lot easier, which is why they do this a lot. It's a lot easier to move things on the gap than try to move them up all day long during the day. So this has been the more, not all, it's always been there, but I think there's been more of an emphasis on it, I would say, in the last, probably the last 30 years from what I've ever, things I've read, just people are realizing they can do more, and they have more money to do more with these futures at times, that then get the equities really to open to that level and follow from there. But this is really impressive. And other than being short-term overbought, it's really so far been a really strong comeback. I do think they're getting right back into complacency. But, and I don't think that, that this is the kind of thing we saw that you just ignore things and they go away. But that's not really based on, right, what I see in the charts right now. To me, it's more of a general market sense where I just see a lot of things out there, and I'd be surprised if none of them have any impact. Usually when you've got this great a number of things swirling around, they eventually do get one or two at least that impact things. But you have to give them credit, because this is really only 2%, roughly speaking, from the all-time high now, right? So just about 2% away. So despite everything, you're right back to there. It's like we said with the jokes about Surf Pro, it's like it never happened. I put some of those in some ideas the last couple of weeks, and that's what they've done. And I think they've got to be given credit. I really am impressed that they were able to slice back through here. But I do think if you look at that 50 that's kind of in the white oval, that's your 50. There are some flats near there as well, and you got this line near there as well. So if they are going to allow for a pullback, some place pulling back towards that gap closure would make a lot of sense. That would probably be roughly at around 546, right? So that would be a little bit of a pullback. But then if you look at it visually, right, if you go from here all the way to here, and then let's say early in the week you pull back to there and then start to go again, that's really a great sign. It's really a sign of strength, right? Or still persistent strength to that point. And they still have the NVIDIA EPS the following week to work with. They've got a lot of those things we talked about. They've got the August seasonality, the presidential election cycle August seasonality on top of normal seasonality. So the problems, as we noted, I think last week, excuse me, normally start in September, where it's really not that great of a month. So, and as I think we noted last week, I wouldn't rule out new all-time highs. And it seems kind of hard to say that, right? When we talk about things like that, might have even talked about it before. I can't remember. I think it was last week, but I can't remember. But now, right, they've just got it right back, and this has really been the modern. This has been the modern way. Like these, I remember reading some study that someone had done. It wasn't formal, but it was more or less, their best efforts in some article, and they were talking about how these V formations are appearing at a rate that they had never have in the past, right through all the real modern market histories in the 20th century, so on and so forth. But I think a lot of that just has to do with the way that everything's become so dependent, right? And they've got to really protect these markets, because any spillover could really cause a lot of dominoes to fall, because they've really completely been, well, they've been super reckless with everything, right? And allowed a lot of reckless things to happen. Everything is built upon reckless behavior these days. So with that in mind, right, they can't afford tip overs that really could be a big problem for the system, because it's unstable. It's no longer a stable, sound system. It's just, entirely Ponzi'd up, debt based. So they've got to keep the music playing constantly. Any hiccup is a problem. But excuse me. So just while we're here, I would cover that as the most favored scenario, like most odds on scenario if we're news neutral. I just think you probably are due for a little bit of a pullback. Could it be more? Sure, it could be more. Could you come back into the 20-day right there in blue a little bit further down? I think that's reasonable. Are there other forms of support there? Definitely. So that would probably be my second level. If the 50 right at that 546 level ish doesn't really hold, you probably come down, another percent towards 540 where the 20-day is. So it's nothing. I mean, once again, if you pull back to here, right after this kind of run you've had, and then you stop right in that vicinity and start to go again, to me, that's a great pullback. I don't want to drop fibs on there and get it all messy again. I removed a lot of fibs to try to make this easier to see. But I'm just saying, like, I don't think you can complain too loudly about that type of a pullback after this nice run you've had. So if they did that and then got it going, again, if I'm a bull, I'm pretty happy about that. They do have this gap to fill, right? Now that they've gotten close, now they've got the all-time high. I think, again, I would say this, that if there's no, they've got about 2 weeks left in the month, right? So if there's no major news that's negative, then I think by the end of the month, there's a good chance they're going to probably exceed the high. Where would they bring it to? Well, the projection of where it likely would go to, odds on now, is about there. It's about 582. So if you want to entertain that scenario, but it's we don't want to get too far ahead of ourselves, right? I think you're looking at challenging the all-time high first, closing the gap, then challenging the all-time high, and they're pretty close to each other. So that's where I would expect this to go. If you look at the slope of the line, if they maintain the rally, it could happen right by really midweek of next week. Just a few more good sessions should get you right to there. The thing is, though, I have seen some chatter online about, I guess, a redux type of thing, or reoccurrence, whatever you want to call it, from the 1968 DNC convention. And some people apparently are planning to, I guess, stir the pot in Chicago at this convention. I don't know how much validity, I would associate with those claims, but I have seen some of that. So you don't really want to get caught off guard if that type of scenario plays out. And that probably doesn't end up helping matters. I don't know if it's a reason to sell stocks really, but they tend to use things like that to, when they want to take profits and sort of work things back down, they do use that kind of an excuse. Well, that kind of behavior or whatever, that kind of outbreak there, it was left the market feeling unsettled, something like that, and it had been a good run, gave sellers a reason to sell, that kind of thing. So don't rule it out. I wouldn't personally worry about it dramatically. I do think there's all kinds of potential for all hell to break loose. I said that whatever it was 2 or 3 weeks ago, the whole year. I feel like there's just so many things that are in the air right now that you should really be at your risk management best, and just like robotically, just boom, hey, it hit my level, boom, I'm doing this. Hey, it hit another level, boom, I'm doing this, because you just don't know when something could start to develop. When that news hits, you just don't know. And either way, you'll still be happy if things do work out, without bad news, and you got good movement and were disciplined. You're still going to be happy with that. You're going to be really happy you did it, though, if there is some sort of news that just comes in out of left field and really upsets the apple cart, because you'll say, well, there's really nothing I could do about it. How would I? There's no way to know that would happen then. Excuse me. And therefore, right, I did the best I could under those circumstances with the kind of consistent adjusting I was making in the market. I think that's the win-win. Either way, you should be happy. So that's me covering the spies. I feel as though they really did. You've got to give them their due. I know a lot of people get their heels dug in. I understand that. It's hard not to sometimes. But if you look at the quick check on just the market breadth, as we said, it got a little better last week. This week, it's gotten better as well. So you really can't say much about, well, no, there wasn't any of this, that, or the other thing. Could it be better? I think there's some things we could say that could be better. If we look at, let's say, where's my, will this be it? No, that won't be it. Okay, let's try another one. Where's my other, no, there's not that one. Oh, there it is up here. What am I thinking? Yeah. So if you look across, we're checking out all the sectors now, obviously the main 12 that we look at, and you can see that. Let's go through them, right? I'll just follow my pointer. I'll just do the run through. XLE, it's coming back, but right, nothing really extraordinary yet. It's been a real difficult name to trade. We thought we might be getting something a few times, only to have it fizzle out and retreat pretty quickly. So again, you can't really rest too comfortably in terms of, hey, I've got a breakout on my hand. Everything's about to work out. You've got to always be, until you really see the trend start to develop, you really have to be on guard for false breakouts. But the point I'm making is this is not lighting the world on fire. XLK has come back dramatically, right? But it's still well off the highs, despite what's happened in the past few weeks. I don't want to draw it, but I could sort of put a transparent support line underneath there. That's pretty steep. That's what I mean by, like, this is a pretty rapid ascent, pretty steep slope, and you could easily lose that support quickly and then have to start relying on SMAs and flats. But this is really not near the highs, despite what's happening in SPY. That's maybe one of the reasons why the Qs, right, are lagging behind SPY to a degree. Former leader XLC it's certainly being helped this week, but it's really not taking off. It's really, you could say, well, it's not too far from a breakout, much like the spies. That's true, right? It depends on how you want to look at it, but it's really not threatening to do it at the moment. Could it? Sure, but if you think about what we've seen, this has been for my taste, it's been a little bit muted. Doesn't mean anything bad's happening. I just would have thought that would have been able to do a little bit more. It just hasn't been able to. Finance XLF. This has done it though, but again, look how steep this is, and this has been my experience too. And I don't want to overdo the volatility storm discussion, overdo the uh, all hell could break loose, overdo the rapidly, I should say, steeply sloping support lines. But when you get in these types of environments, what I've noticed in my career has been that when it gets really steep, then news, it almost seems like the market is pricing in that news could happen in some weird way, where they get all their gains in really quickly, they get the drop in really quickly, because it's almost like the market knows that there's going to be another like reversal news story. I don't know, I don't really think that's the right way to put it, but I mean, I'm just trying to convey what I've seen. So when things do get this sort of vertical the way they are, you've got to be on guard. Is my point, and hopefully it'll be you'll be on guard and it won't matter, right? We'll get good rallying, but you got to be impressed by XLF's comeback. XLRE stuck in the mud, but not off the highs, right? So overall, so far, I mean, things are pretty good. This is defensive XLV, and they came after that though. This is defensive, and this is made a new high and it's just off the high. And they came after that. XLP staples, right? So healthcare and staples both defensive, and they're so XLU to a degree that is at this point it's a little different than usual, I guess, but some of those are still nicely bid and barely off highs. And so that's really a little concerning, especially when you look at XLY. And again, XLY not nearly as impressive, right, as XLP. Did it come back? Yeah. Did it have a good week? Yeah, sure. You can't deny it. But definitely a little concerning that this is really not joining the party the way that it had before, right? When the market was really roaring and before the corrective action in the market started to unfold. XTN, right? This is one of our canaries. It has been, along with sort of XLY and IWM, excuse me, but not really a great week, not a great follow through here, right, from transports. So that to me is, again, remains a concerning sign. And then these are not bad, right? These are not bad. But again, I look at the XLB and I look at XLI and I think, well, that's not bad. It's kind of working its way back there and all that, but they just, right, they don't seem to have the kind of I don't know. I don't see the activity in UOA. There's been a little bit really in materials, not so much in the industrials that I've seen. So I'm really a little kind of dubious about this XLI, which I'd rather see work, but it isn't, you can't, at the same time, I'm sort of nitpicking. It's not too bad. It's not far off the highs. It probably helps out the Dow. And we've already talked about XLU. So basically, that's the rundown on the sectors. I feel like if you go back and you look at the notes that you may have taken a screen cap of, and I'll kind of get to this because I'm jumping around, but I think you're lacking oomph in XLE, XTN, XLY, XLI, XLB, and IWM. And XLK and XLC are still off the highs. So let's look at one that we should keep an eye on, which I think is noteworthy this week, is XAU. We've had a lot of paper, not, I would say, not an overwhelming like surge, but we've had a lot of paper lately in the metals stocks, and there's a lot of ideas that are almost all bullish in the UOA prologue right now, and then we even use some in UOA essential. I think I want to say we used SLV this week in there in UOA essential, because by the time I'm recording this video, of all the symbols I've looked at all week long, I got to tell you, I start to get like, wait, was that last week or was this the week before? But yeah, I'm pretty sure we used this one. That went out on, I think, Monday here. Tuesday's the webinar. didn't do much, and now it seems like it's starting to participate. But remember, just because the sector looks good, we can't really pick the name we want. We need to wait to see where the UOA players are showing up. And they did actually show up in SLV. They did show up in NGD. And you might be wondering, why is this guy showing the stock? Because to me, this was one that I would probably not normally include in UOA Essential. UOA Pro, because they're accustomed to more ideas, and some of those are rinky-dink names at times, because to me, they're flashing good opportunities. We did include the NGD. Ryan handled the particulars of that like he always does, because he puts the UOA Essential together after I've done some of the name selections. He generally gets that ready the following morning on Tuesday morning to prepare for the webinar. But this one seemed interesting because you just don't see a lot of UOA in NGD. When they went into that specifically with in the monies, but there's other names too, like Newmont, there's GOLD, there's been a couple others. I can't remember them all, but we got a couple names in there. And XAU, I'm pretty sure, right, this is acting pretty darn good right now. Let me see if I'm right. Yeah, I mean, it's having a good day at least, working its way back towards the former high, but I'm pretty sure, I want to say that gold, I want to say that gold, one, let's see if it gives me anything. No. I'm not getting the this Barrick Gold. That we can at least look at this one. This is another one that we have right now. So, this is trying to break out, and I just want to remind everybody about this, because while we haven't had interesting sectors lately. It's been, I think, a lot of risk on, risk off. We've been trying to make some finer points, like we just spent a few minutes doing with them. There's been a real surge in here. So this might be something to take note of. And the reason for that, if it lets me bring this up, the reason for that, let me see how far back this goes. If I can get this, there's your high in GLD. But if I go to max, now this is not giving me as much as I want. Let's see if I can get a little bit more for everyone. Because remember, this is sector situation too. So I'm sorry, I will get back to everything, but excuse me. Got a new phone here that's not cooperating. This is what I've been talking about for a long time, because this is not something you come across every day, where you've got this massive kind of like decade and a half spanning cup and handle pattern. And this thing's been trying to fire and go for a while, and it's always been a tough sector to trade at times, but this is trying to really continue to go here. So I thought it was worth highlighting that, since this is supposed to be a little bit of sector situation. I planned on doing it later, but the way that things unfolded, I ended up just deciding to jump to it. So you can look at other things in here in the space, but yeah, I mean, I think you've got some real potential in this. That is not a good sign to me, honestly, in terms of the dollar and other things. But let's hope that it's rallying for other reasons. There's always that possibility. So yeah, just keep an eye on that one. It's a tough one. But when you do catch rides in there, when it's really in demand, it can really produce good moves like nearly everything else. So that's that. Now let's get back to the SPY. So let me just do the review while we're on SPY here. Balance of we talked about the selective review prior last week. The balance of the year, I'm sticking with volatile, the same slide we've been using. I do think the gang worked fairly closely with the script we discussed last week. We're only 2% away. Like we said, the economic calendar, lack of negative geopol, that basically seemed to help the cause. The mega caps that we covered, and NVIDIA and SMH, which all look primed, all joined the parade. We saw that really in sort of XLK, but here's XMH, and you could just see from where we were looking at it, they just kept coming after it, and so you really, again, you never know. The weekend is tricky. That's why another reason I'm not big on making predictions, because you just don't know what news is going to come out, which often will undermine, really stellar technicals. It's so that's the thing. Like, the technicals are powerful, but you also need the news cycle to cooperate with you, right, to really get great timing, and that's not always the case. But they just opened up, right, and took NVIDIA all the way through. So we had that as a name in UOA Pro the prior week. It was still in force anyway. I think I put another one in there on this one too. We had ARM as well. And so these, you just can't complain about what the Sammys do. Like every week when Ryan and I sit down to try to select names to use, and we're trying to get people in good options that in stocks that have a chance to really deliver movement. And we came in on what, Monday we closed here in ARM at 117ish. And so we were hoping, right, we're hoping to get a $117 stock giving you 5% one way or the other is a good trading opportunity. But this thing went up to 132, so that's a 10% move, roughly speaking. So yeah, you got to be happy with stuff like that and the NVIDIA doing, and at SMH overall. So we, hopefully this has been a good week for folks. The last couple of weeks were good. There were a couple where we didn't get a lot of big moves. Sometimes it happens that way. You know how it is. But I should be doing this in order, but I just wanted to talk about these because I'm pretty sure that we brought these up last week, and we also MSFT, NFLX, ESLA. Let me just double check that I've got. Yep. So I'll do the end, and then I'll just do NVDA. I don't think the order that I put those in is going to matter, but I think our graphic will still come up. I think, yeah. So I know we had a fib on here from last week, and you can go back again. I think we talked about the secondary resistance line that I've seen happen at times, and that all can become sort of important in the release point if it can get through. And again, they just came back for it. I really do think because so many of these megas were obviously down as a package, big. And I think the fact that they could move the market back up and also get a good deal, so to speak, doing it really helped the enthusiasm factor. And so now it did. I think we were talking about trying to get up to the 250s due to a flat line somewhere in there. And it actually got about that high. So I think that's an impressive week, more than I would have expected in most scenarios. That you don't go just straight there relentlessly day after day, but that's what happened, right? So that was that. Now we talked about there. So yeah, so the high profile ULA that we had the prior week and some this week did finally have a chance to follow through. The market really delivered an opportunity at the very least. I still think you're easily right back in complacency mode. That's not normally a sign that it's over, but we have to acknowledge, right, that a lot of things that we talked about last week, the election year, August, in an election year especially, the convention, which you would think that the administration doesn't want the market to be on downswing. We talked about that. We know what Yellen's been up to, and we know what the Fed is expected to do and doesn't want to appear to be theoretically appear to be political or whatnot. So I can't see them letting things fall apart in front of a major political convention. World still awash in issues. Same line from last week. Talked about market breadth already. Talked about the sectors, especially the XAU really doing its thing. I'm still saying, again, last week was really about staying at DEFCON 1, Esterhaus warning type stuff because of the news that could drop, not because the market was in a dangerous place, right? It would take a lot now. Look at where we've ran to. It would take a lot to fall back to where you're really in trouble. really at risk of another leg lower. So I'm looking at this as uh, pretty darn far away. Not that it would be fun to drop all the way back down there in short order, but I'm really breaking would take, to break this at this point, and that's quite far away. So that's that. I'm really only saying that again due to because I think there's just a far. I think the next several months there's a far greater chance of news developing that's significant and impactful than at normal times. And volatility events tend to cluster in sort of shorter time periods. Normally you kind of have uh, easy, steady as she goes type stuff, but every now and then you just get into a very volatile situation where you're just waiting for the next thing to happen because that's the sort of part of the cycle that you're in that happens every so often. You can't really say I know that's going to be the case. I just have the sense that again the chances that it's upon us pretty much now through the end of the year. I think that's just there. I just the sense that I have just from the reading that I do and things like that. Um, you don't see major divergences in the market breadth readings to say, well, the market's sniffing it out. The charts are telling you that. You could make other arguments from charts, maybe that the charts are telling you that, but I don't see it from a lack of participation, uh, type of a thing, which is very common before major tops. Usually, in my career, I've seen a lot of divergence from market breadth, and the market just carries on blithely and just continues to go. And then eventually, it has a day of reckoning, but that's not even in place right now. I do think we're short term overbought. And I do think, again, we talked about historical volatility. I do think this could lead to more HV. I'll just draw a line on here because I don't really care that much about this. And we don't look at it every single week in the videos, but because I can just bring this up anytime. There's a couple we could say, well, after the big surge, it's pretty much going to put you the same place, like all these lows. So right there, you could very quickly start falling back to corrective through this support lines that we've drawn, but you've got all the SMAs waiting. You even have the 100 there. So again, to me, that would be, I would love that if I'm a bull. Hey, I take the steam out of it. It backs up for a session or two, maybe three. I start turning the corner. Then I start making another run. That would still, in my mind, be a pretty bullish retracement if you drop down to say the 20 there in light blue, just on this package of the biggest of the big names, the mega caps. So that's the same kind of thing I'm looking at in the market. And again, I would just remind everybody that the with the VIX, we'll bring it up now, but I wouldn't just buy VIX, type stuff immediately. In other words, like the offshoot stuff we've talked about, the downside put butterflies, the all these things. If you want to start getting a little bit of that because you are antsy and want some, I understand that. I just wouldn't load my truck up yet. I would really want to see the market start to at least show me something that it's going to struggle and fail more. Or if that news does hit the tape, get on it quickly. Some people will make the other argument. I've got to tell you that some people are going to say, no, don't wait, because you really want to get it. And there's nothing wrong with that. It's just that I don't like it. I don't like getting it way too early. That means like getting that vol loaded up, whatever you plan on doing. Again, I think Ryan and Greg, especially Ryan, with the time he's gotten some of the webinars, you could get him to help out with that. Say, hey, I'm thinking about a downside put butterfly in, I don't know, SPY, for just make it easy. He can show you, some pros and cons and maybe other things you could do that you might like. But anyway, I think you should wait till this sort of squeeze, or if you call it more of a legitimate rally, I'd wait for that to sort of peter out and roll over before I really load it up too much because, right, look, I mean, they're just not very far off the highs right now, right? So you haven't really stopped going up yet. There's no signs, right? You're going to, it looks like close as of now with less than 30 minutes to go. You're going to close, it looks like near the week's high. And the only reason maybe you're stopping is because people are tired of running, and they're just happy with their week and they're not pushing their luck. So that's where I would be. I do still think there's a lot of problems out there. I am not going to cover any of those things because we've talked about them in the past. There's a lot of geopulse stuff that I think they could use to do a short-term rug pull, things like that. Political developments here, more assassination attempts, regrettably, all that kind of stuff, which starts sounding a little far afield, but then again, they happen and they've happened throughout history. So you've got to acknowledge that. But that's possible. And I think with the way that things are heightened these days, that's it's definitely possible. Not necessarily just assassination things, but all kinds of just wackiness, different developments you don't normally see, that kind of stuff that could really be there. Let's take a look at some other things. We have charted the spies. Let's chart the diamonds because they probably, I would say, look second best, if not the best. Right, they're only about 1.5% away from a new all-time high. You can see the resistance they're coming up to there. I do think a lot of people have decided they were going to jump back into this thing and come after these stocks. And right now, you kind of see this expanding wedge, megaphone, whatever you want to call it, should start running into trouble theoretically up here. There's your upper Bollinger waiting for it too. I can give everybody something real quick on that. It's about 80 on your hourly. So again, to me, it's not overdone on a daily in my book. It's just overdone in the short term overbought, meaning sub dailies. For me, I'm using the hourly on that, and I'm just looking at it and saying it's about 80 on your RSI, roughly speaking, at today's high. So does that mean you should probably get a little bit of a pullback? That's all it really means to me. You should get some kind of breather period, rest period, pullback or pause, whatever you want to call it, before it tries to go again. And that is really a good thing for bulls, if you ask me, because if it does just keep ascending, then it becomes a very long run. It gets tired, and when they do make if and when they do make a new all-time high, if they were to do that soon, it would be very vertical, very tired, very late, long in the tooth, very overbought in the short run, and probably means that the breakout fails. If you want the breakout to succeed, it's a lot easier to sustain new highs if you put a little base camp right below the highs and you dawdle around for a day or two, letting everyone kind of catch their breath, and then you launch your assault on the all-time highs. Then you have a chance of really breaking through. So just my 2 cents, but I would say, look, you've got to keep the former couple of highs near 411. That's got to be one. So up 1%. You're up a little bit less than 1% from there at the all-time high. And I think, right, that would be where I'd look at. Now, clearly on the downside of the diamonds, I think you're looking at the 20-day where the gap white oval is, and then the next one's going to be your 50, right? So you've got the same kind of thing happening there. I don't think it's worth getting into the nitty gritty of all the different levels, because we kind of got the move that we were expecting. Should have take the bullish route this week, right? We kind of tried to figure out where that would be, mainly in SPY, because I didn't want to take too much time up. But just as a refresher, it blew through that, right? So even what I thought was going to be a pretty nice week for bulls, it only took them 4 sessions to really shred right through that I think I was saying upper 540 somethings to about 550, and they blew right through there. I mean, you're through there by 1% basically. So it just goes to show you, especially if they're able to do it on gaps, right? They can make magic happen. So, I mean, maybe we'd have to look more into it, and I don't have that data, but maybe also you've got a situation where it was short gamma issues in SPY or SPX or both, right? So they really put the squeeze or the hurt on people by gapping through certain levels. I don't know what the OI was several sessions ago or what happened on the dailies or anything like that. It's unfortunately, I'd love to, I mean, Ryan and I love all that stuff, but we have hopes for it, but we just, unfortunately, it's not in the cards for us right now. to focus on things like that. We have so many other responsibilities. I think the next one we should look at should be the cues, and they definitely lag behind the spiders. Which spiders are only 2% away, and you can look at the cues right now, and you're closer to 5 and change, right, percent away from the all-time high. So despite all those tech stocks rallying the way they did, and SMH and Nvidia and all that, you're still way off. So you still have this one gap that would be a clear fill opportunity if they keep the momentum going. That would be a natural sort of attractant right there if you keep going. But I would expect it to kind of happen in tandem. This is clearly the easier gap to fill. The low there is about 480. So we'd have to go about 5 more points up, which again is another 1% to get there. So, and I think your next level above there, there's sort of a flat line at 487-ish. Then you've got the 493 level to close the gap. And then you're looking at this, right, this sort of high area, depending on what you want to focus on. But if they kept it going into that, which they could, you would definitely be overbought at that stage in the short run. The daily is not overbought. It's nowhere near it, which is why I'm not saying this rally needs to completely fall apart. I mean, if they want to, they can rally plenty more and it will not be daily overbought. The only thing they became overbought is your shorter term hourly type stuff, which got into the 70s, into the mid 70s on this. So that's the issue, is that you got up there. I don't even think that's that overbought, which is barely above the overbought status on the 1 hour. So again, ideally, I think you get the little pullback. That's what I would want. The bulls rarely listen to me, though, and they usually charge straight ahead. Who knows what Monday brings, but I think it's very obvious, right? The next level to really click in at would be closing that gap. And if they're going to have a pullback, they may as well close this gap. There's a little bit more of kind of like a hidden gap between here. I'll just add that for the record. Let me see if I can get that to cooperate. But there's a little gap that looks like it was not filled in here too, just below the 100. And that wouldn't be a crazy spot for the gang to also do their thing. But I'm pretty sure the high that day, 454.37. The low is 455.68. So yeah, it's kind of a tougher one to see. But that would be your next level down, which is going to really be right near the 100 day. So it's a little bit further down than the 20. But you get into this zone, you're getting pretty close. And remember, a lot of people were bidding for the gap close with their to take back calls they sold or stock they sold or to offer puts. You got to be careful and always cheat, if you ask me, if you want to get your trade done, right? You want to get your transaction done. But I have no problem with this thing rallying more. I don't see why, right? Unless there's news, I don't see why it needs to be over right away. I'm not saying it can't. I'm just saying that I don't have any major problems where I think that this is immediately going lower. Now, it would be, because of the rapid ascent, the slope, it would be in trouble quickly in terms of pulling in the most aggressive traders that like to fight against the current trend or think it's ran too far. So it wouldn't help it probably to drop below, let's call it today's low, because that would start putting it under more pressure potentially. But that hasn't happened yet. And again, this is another reason why I wouldn't start loading up on a Friday a vol unless you think there's going to be weekend news that's really very bad, right? And something maybe that a lot of other people don't, or you suspect something. But otherwise, I would just try to let it play out. The longer you can let it play out, the cheaper the options are going to get over time. So if you don't load up too soon, that can be helpful, because you can not only get better prices, but you kind of avoided the theta pain that on those positions that are there to hedge your portfolio or to be aggressive with the downside. But I think we covered this. I mean, those are the levels of the up 480, and then you got the 487-ish after that, if you ask me. Then we've got the ones we covered here to the downside. So that's really that. I think the interesting one, because it remains the sort of standout in a not so great way, it keeps standing out from the pack because of its inability to really um, go up or down, right? So it's been in a very, this has probably been one of the trickier sequences in IWM's relentless march to nowhere, right? Over the past, let's say, almost year, right? So it keeps threatening to do this, threatening to do that, and keeps reversing. So this is probably something that a lot of people don't want to hear, that are, trying to spin things a certain way. But a lot of people look at this as a canary, because if you're really in this wonderful economy that a lot of people would have you believe. I saw some people gaslighting people again on Twitter today, trying to act as though inflation was really not too bad for in food the last several years. And I really, to me, like, it's, I don't even know how you could begin to make that argument. They tried to make it as if it was only up marginally, when I do some of the shopping for my family, and I see the prices myself, and they're significantly higher. I mean, I think we were paying $5 for, I mean, we get them from friends and things like that. But if we ever buy store eggs, it's been $5 a dozen, whereas before, you could probably get jumbo eggs for $1.99. I think, for example, like typical steak we would buy that's probably up about 70%, think something like that. Yeah, I mean, everything's up more than 20%. The way this guy was arguing, that I can't find anything close to up only 20%. That's a regular part of my purchases. But anyway, the IWM, I think, has been reluctant to go, due to rates being higher, and due to the fact that it's really not that great in across the board in small business land. And it still apparently remains that way. I think it would be a great sign if we did start to get up and break out and go through. This is a tremendous job by the gang to slit every throat they could that bought this breakout. Again, I noted that at the time that it was munch ballyhooed, and when they get a lot of people involved that are, trying to join this emerging party, they often do Shanghai them. This was just really ruthless, though. That is really, like, if you overstayed your welcome just a little bit, they annihilated you. And it's brutal. It's on the comeback trail, right? You want to look at a potential gap fill. We haven't gotten that yet. You're so close. You would think that, right, at least you're going to probably get the gap fill, especially because everything else is overall just chugging higher. You would expect that, but you haven't gotten it yet. It could get close. There may, especially, right, if there are some signs emerge that rates are going to roll over more quickly, more forcefully. Maybe that's the case. I don't know, but that would help. That would certainly probably help them to at least get going. We can't rule out that they could break out as well, right? But I think it's very clear this is really, it's a good trader, despite being sort of range bound for a lot of the last year, because the options are not typically that expensive, and it does at times deliver really great movement. But I think you're just looking at a breakout. Really, the gap, probably, if it can close this gap and then you still see momentum, that would be a good sign. I would trade that, thinking it could make it up towards this Bollinger, somewhere in there. So you could get a nice, maybe 3 to 4% ride potentially if it can close the gap. On the downside, I think the 50 is really clear. It's getting stuck at the 20 right now in light blue. You got a little gap here. You've got the 50 in that vicinity. I would think that would be your first area of pullback. And then the next area is your 100 at 206.58 ish, or 57 now. But the 50 is really right there at what, 208.41. So just about, a little bit less than 1% below. But that's where I would be looking at on the downside. Again, if this doesn't hold, again, we do the old just draw an aggressive support line. There's one, and you could say, well, the slope shifted. So let me again draw another aggressive support line right there. And if you want to get aggressive, right, pretty much the 15 SMA in red, 210.63. And then this is your support line that's probably going to not hold up there because this gap closure is going to be right near there, the 50. They brought it down in a bullish market. Overall, probably would be hard pressed to get and touch the 50, but you never know, just because they people that try to bid, sort of like bidding the figure, bidding right on the number, a lot of people tend to do that and they bunch up there and they don't let you transact. So I always try to remind people to cheat it a little bit. You're not going to maybe get the best price that way that you could have sometimes, but there's a better chance that you're going to get your trade transacted and move on to the next opportunity. But the point is, I think the support is really coming in fairly closely. News could shift that certainly, but I don't see this just plummeting right back down without news. I think people are going to say, well, wait a minute, if they do march everything else back up to the high, the way they're kind of, I think, set to do without any kind of news tilt, right? A tilt effect that happens due to news. I think they're set to move things back up even further overall. I just feel like the short-term overboughtness is what needs to get taken out of the way to really make that possible. I think it would make it a lot more possible if they would just concede that we need to pull back a little bit on Monday and Tuesday, sort of bottom out or sort of find footing on Wednesday, and then start to goose into the weekend. That would probably be a good solution, or a good, I should say, scenario for them. But I think that's pretty much it. The VIX I will bring up again, just to be clear, because that did not quite drop all the way down to the levels we're hoping to see it return to. But look, it's been a pretty bad week for the VIX. It's not that elevated right now. So again, probably right, because you don't have to just do it one way. It doesn't have to be like do it Wayne's way or do it another guy. I would really not fault anybody with it coming down this much, with how much concern I have for news developments, to start nibbling, even though I'm kind of saying like, wait, let's let this rally peter out, right? It really wouldn't, I wouldn't think it's a major, I wouldn't call it a major mistake at this point to start getting some of it. You could partial your way in or whatever. So, but no, I mean, I think everything's just continuing to swing back in favor of bulls. It's a different chart. It maybe looks a little bit clearer, not as messy, SPY. But yeah, I mean, this is, to me, everything's sort of working back in that way. And I would be surprised without news if they at least can't close this gap. It would surprise me without news, but I'm thinking really this gap here needs to be closed before this gap will be. That would be the better way to do it if I'm a bull. But again, they don't always listen to me, so they rarely listen to me. So that's really that. I'm trying to think if there was anything else I wanted to share, because I don't think really things are terrible. But I think, yeah, that's what I wanted to note. I just think that they could easily re-energize after a pause. So if my hunch is right, it'll be a little bit tricky next week, maybe in the early part of the week, where they'll find a reason to sort of pull things back a little bit. That would be my sort of wish if I were a bull. And then from there, then it might be off to the races if there's no bad news developing in Chicago. And then with the NVIDIA earnings looming, the prior week, but they really did come after the UOA in there. So again, I think we had an idea coming into this week. And I don't think that one expired. And then we added this in, I think it was Rebel Pit Pro as the focus name of the week. And they still came in for it like gangbusters in terms of call activity. So I'll try to get that real quick now that we got on that. Just bear with me for a moment. Let me see if I can bring up what came in there. We'll just do a quick search for us, just to let everybody know, because this is an important stock in an important sector. right, in this market environment. So they came in on the 14th and they bought 19,000 October 110 calls. They rolled those from the Augies. So they basically just stuck with the 110 line 19,000 times and rolled out in time. And then they also bought 19,030 AUG 124 calls. And they closed 19,000 Augie 111 calls. So that was also a roll. So pretty large trades. They're sticking with it. Uh, they've been right, if you want to call it that. These trades happened with the stock near 117, so they were certainly right at this juncture with it hitting 125 today to stick with it, right? They were certainly right to stick with it to this point. And as I've said before, right, you probably just don't go straight up into earnings. It would kind of look the way the slope it's on right now, it would kind of look something like it gets up near there, right before earnings are due. So that probably isn't likely. That's why I'm thinking again, overall, there should be a little bit of undulation and then a resumption if we can operate in sort of a news neutral to news positive environment the way we have been. So I think I'm going to wrap it on that, gang. I think that's about it. Try to include a couple different things this week, just a little bit of the UOA, a little bit more of the XAU. Try to include those notes so that everyone knows we have had paper. The paper's been working out in these spaces. The mega cap paper generally worked out, and even names that are dubious to some, like one that comes to mind is Carvana. And I know Ryan probably cringes when he sees this idea go in, but the chart's bullish, the EOA was bullish. Stock, I think it was about 144. I want to say is somewhere near where it was. I know that used car prices have come down, the whole works, but these guys march to the beat of their own drummer, and that's the thing. That's why if you try to put fundamental, I think if you try to add in fundamentals that you are hearing and reading about or exploring, and you try to sort of imprint that on your UOA in the short term ideas, it's a real tough road. And in the longer run, you might have a better chance, but in the short run, it's really what these guys want to do with things and where they plan to take it. And yeah, so I mean, this was like a nice pop in a stock that probably a lot of people would scratch their heads about with knowing what's happening with used cars right now. But it just goes to show you, right? The fundamentals, you might be right in the long run, but in the short run, very, very tough. So on that note, stick and move, gang. Just stay nimble out there. Be ready. Again, my spidey sense says there's a little bit more, I should say a lot more out there news-wise that could hit than normal. Not that it will, but just the likelihood is much greater. And to me, the smart move is that you just keep rolling to stick with your trades instead of staying in your 90 delta, 95 delta calls that you've been riding and they're working. You just say, well, look, it's been a good ride. I'm going to slip down to, I don't know, 70 delta. Then it keeps going. And then you're like, I better move this to 50 delta because now this thing's starting to get overextended. Then you get another pop, if you're lucky. And then you say, you know what, this thing's still working, and so is the market, but I'm going to get the 35 delta because this thing's now got a 75 RSI on the daily or something like that. That's what I would think about doing, but more so just in case, just so you don't get caught off guard if something happens. And you're still going to come out a nice winner, even if you do overroll, right? And I don't mean like the overroll to the 30 delta, 35 delta. I mean, if you do a little too much rolling versus what you normally would do, but you're still a winner. It's just getting clipped after you've had a good run and you left, potentially profits on the table if we start getting some adverse news. So everyone, take care. Have a great weekend. Try to get this out through Ryan sooner rather than later. And thank you all for tuning in. Everyone, take care.